Euro USD market review 24th of May. Let's get it. Alright guys, so today we're going to be looking at Euro USD. I know a lot of you guys trade Forex. Let's go ahead and chop up Euro USD and what I'm expecting for this week going ahead. So first off, right off the back, we're on a daily time frame and we can blatantly see that price is making expansions higher, accumulating orders, making another expansion higher, retracing. I said this in my last 3-4 videos now, just trying to get you guys to understand price is either going to expand and accumulate or expand and retrace. In this scenario, it retraced into our daily fair value gap and now we're looking to push up again. That being said, we know the trend right now is an uptrend for EURUSD. We're looking for bullish opportunities on EURUSD. The retracement is over now. When price retraces, it's only coming back to fill in some kind of inefficiency, which is this daily fair value gap. There's inefficiency in trading here, lots of buying here, no sell side offered here, so hence why we have to come back off a sell side. Now this place has been evenly traded and now we can continue about the rise. So the first thing you have to remember is price is drawn towards the money. So you have to ask yourself, where is the money? Let's go ahead and identify where the money is first, and then we can look about some kind of entries for this week. We have this week's high. I think this was the week before last, I believe, or 2 weeks ago. There's going to be money up here, money in the form of buy stops. There's also going to be buy stops up here. And there's also going to be one more set of buy stops up here. We've identified buy stop 1, 2, and 3. Buy stops are just liquidity. It's just money. There was money beneath these equal lows down here. This low and that low, these are equal lows. EU came down, ran out the liquidity beneath this low that also tapped into an area of inefficiency, so clean it up, and now we're looking to target the next set of money, the opposing liquidity. And so here is the opposing liquidity. We have this week, this Tuesday 6th of May high. For the scalpers, this is probably what you're looking at. This is a 30 pip move, you're good, you're Gucci. This is not going to be where you're looking to enter from though. It will most likely be a bit lower than that, but I'll come to that in a minute. You're looking for price to run out the buy stops above here, the buy stops above that, and although there's buy stops up here, you don't have to take it there. What you could do is you can take it to the very close of this buy candle and the open of this sell candle. So that would bring you to 1.5010-ish. So that's what some people could do, and then you can wait to see whether your runner can take out the buy stops above here. This one question will help you understand where price is going to be going this week. Always ask yourself, where is the money? There's 3 sets of buy stops. Most likely, you'll be going for 1 and 2. These ones are really close together. These highs are, let's just double check that. That's about 43 pips. So basically, this whole range we're working with now, so go from this candlestick here, the close, to up into this level here, we're talking about 216 pips. But you don't need to go for all of that. You can literally just go for this high here, a 67 pip move. Work out your risk to reward within that range and take it to this level here. Now you understand that price is drawn towards the money. Price is always looking to go towards the money. Price only retraces to generate liquidity above all of these highs to then run it later. If you understand that, you are going to be able to capitalize on EURUSD this week. So we talked about those targets. We already know it's bullish on the higher time frames and there's nothing else down here. And so you're expecting price to rally up into these levels here. You guys are probably thinking, okay, that's all good, but how do I go about getting an entry when it comes to Euro USD? I've said this in a video before. I can't remember which video it is, but if I do, I'll attach it to the cards. With the TTTM style of trading, you want to wait for price to dip beneath some kind of liquidity first before looking to enter. If I'm looking for price to dip beneath some kind of liquidity first, ask yourself what liquidity is going to be produced or created that I can get price to dip beneath that to then rally higher. And so this is where you look at Asia liquidity. You're going to be looking for price to dip beneath Asia liquidity. I'm looking at roughly about 1.1140, that 40 to 50 mark, 1.1340 to 50. Within that range, you want to be catching some kind of entry within that area to at least take out some liquidity. This liquidity and potentially this one too. I want this to happen Monday, Tuesday, Wednesday. So that means every single time I see this happening, Monday, Tuesday, Wednesday, I'm looking to jump in. Ideally, I want Asia to come in and go nowhere, just sideways like this. This is accumulation, it's going sideways. It's accumulating orders on this side, and it's accumulating orders on this side. It's accumulating buy stops, you can just about type with this, buy stops down here, and it's accumulating sell stops down here. Then I want London to open, so let's put a little line there. Then I want London to open. This is London here. Let's put a little L for London. Then I want London to open. I want London to mess around and then dip beneath Asia into our area of interest. So this is going to be that 40. This is going to be that 50 mark. And this is going to be our 40 mark. And it's within this level here. And ideally, I would want it to happen in London. Ideally, I want it to happen in London. But that would be the perfect. But it's within this low here. Then I want price to tap me in. Or I'll market execute, get into that trade. And then take price. Not just above Asia, where there's also going to be liquidity. And the aim is never just the Asia liquidity high. Although, if you are a scalper and you want to catch this move from here up into this level, look, by all means, you know, go for that. That's all good. Go for that. I want price to then take this to our area of interest. So this area of interest is this level up here. This is the most ideal entry. However, if for whatever reason you are not comfortable with catching price when it's dropping, I know there's going to be people that are uncomfortable doing that, then you want to go for the next best entry. And when price is making this move up, there's going to be some kind of inefficiency created here. And an inefficiency could be created here where there's uneven trading, where there's only one buy candle that passes through and no sell candles passing through this range here. This would be ideally where you'd want to catch your next entry. We know price does not go up in a straight line. It could go up like this, then retrace and then go higher, and then it will continue to do that, or it can just go up like that one time down and back up. The aim is to catch price wherever there is inefficiency. So don't forget, this is entry type 1 and this could be entry type 2, this one and that one. So don't forget, like I said, when it gets there, you can take partial profits. There's no issues with that. That dip into, let's say, that 40-ish mark to 50 to get here, that's about 30 pips. And this alone, this would be quite juicy, especially for those scalpers. You've got relative equal highs up here too. So that's obviously going to be a draw. But ultimately, this is a good one to go for. Relative equal highs again, you know there's going to be liquidity above that. And then taking it to this level now is an extra, it's about 80 pips or so. So guys, look, this could be a very juicy move. And obviously there's the big one, the big boy all the way up here. But we will know what to do once price gets past these set of buy stops. But that is the play for EURUSD, guys. I'm looking for another leg up, another expansion higher. So we have 3 sets of buy stops to go for. It can do it. Look at this. One candlestick can do it. This candlestick here was 300 pips. 300 pips, this candlestick here. And so if this move here is roughly about from, let's just say from that mark here to in here, 225 pips, you know it can do it in one candlestick. And even if it doesn't, this should still be a juicy move. So guys, that's my play on EURUSD this week. Hopefully you guys can look about that. If you're not comfortable to get in, then don't. No one's forcing you to get in. You do not have to get into this trade. Also, guys, if you're new to trading Forex or if you've been searching for a good broker, I currently use IC Markets. They are a reputable broker. I've had no issues with them, so my link will be in the description if you want to go ahead and get involved. If you want me to dissect more pairs, then go ahead and drop me a comment below this video with the pair you want me to analyze. Peace.